Sheldon, welcome to the show. You are the managing partner of Blueprint Equity. Tell us what Blueprint Equity is.
Yeah. So Blueprint Equity is a growth equity fund. Similar to a venture capital or a private equity fund, but we're kind of in the middle. And I can talk about the differences if you want at any point. Um, but yeah, we're a fund. We have about 600 million under management. Lucky enough to invest in some great entrepreneurs and work with them to grow their mostly B2B vertical operating systems or vertical SaaS systems from one stage to the next stage and help out quite a bit along the way. So that's
Yeah,
the
that's why I'm excited to talk to you about is specifically where you're investing right now and kind of the state of that market, which is really interesting and seems to be somewhat volatile and maybe a little bit too crazy, too volatile, honestly. Which I want to talk to you about. But real quick, when you say growth equity, are we talking like Series C, Series D,
almost
um,
all Series A.
Series A? Okay, perfect.
So we come in, usually businesses are doing 1 to 7 in ARR, growing north of 75% year over year, bootstrapped or capital light. So we're usually leading that first institutional round or that Series A. And our check size can be anywhere from 5 to 35 million.
Okay, perfect. Okay, that makes a lot of sense. So, yeah, you're in an interesting spot, right? And particularly investing in B2B and SaaS, and there's this term that's got some attention called the SaaSpocalypse. Give me your sense on the state of SaaS right now.
Yeah. Definitely have heard that term more than once, as you could imagine, over the last few months. Um, no, you summed it up. It's very volatile. I'd say for me, I've been investing now for about 20 years, and it's the most exciting and the scariest time uh, at the same time to be a software investor. Exciting because we have this new world that's quickly playing out in front of our eyes, and a ton of opportunity. Scary because, like you said, everything is changing so quickly. So yeah, it's a little bit of both right now. I think the state of the market, if I had to sum it up, not just um, for where we sit in kind of the growth equity world, but upstream from us, the larger growth equity or private equity firms. Um, a lot of folks are just kind of, it seems like almost frozen because they're trying to figure out, hey, they still have trillions of dollars to deploy. And so they will, find a way to deploy it, but they're trying to figure out, do we repoint the can in a certain direction, or do we just kind of hold for a little bit and wait for the dust to settle? But for at least since February, really, I think most firms have slowed things down materially to wait until there's a little bit more of a calm or a little bit more of more conviction on which direction they want to take the firm.
Yeah, does it make sense to you that the term SaaSpocalypse is being thrown around? And some of these companies that are public, that are SaaS companies, and for those listening, that means software as a service. If you don't know, some of these SaaS companies that are public are like trading like basically revenue, right?
Yeah,
Like it's fascinating. I don't know that it makes a ton of sense, right? Like, but maybe it does because like people think like you can just spin up a HubSpot in a day, but you actually can't, right? Like
yeah.
it's really
No,
interesting.
I think it's totally overblown. We obviously don't do anything in the public markets.
Sure.
Uh, and no one should rely on my advice for any, public market, stock picks, but,
But
um,
you hope your companies do go public at some point or get bought by PE, right?
yeah,
Yeah.
exactly. And I would say this is to me, a good time to be buying public market SaaS companies. Because I do think they're so undervalued right now. I think, the broader market just had this whole kind of freak out moment. Yes, it is easier to start software companies, easier, and you can do it easier, quicker, cheaper than ever. But, you still, no one's going to vibe code a solution for, you know, uh, we do a lot with SMB mid-market contractors in the construction space. Like they're not going to go home and vibe code their own solution. They're not going to stay on top of what's like bleeding edge from a technology standpoint. And from a competitive set, like you still need people to sell the product. You still need people to service the customers. Like, can software businesses be leaner in the future? For sure. Um, but it's going to be really hard to have a one man or woman show and do everything no matter what and be a really successful business. Especially if you are the operating platform for these companies, which we invest in. So, yeah, I think there's truth to some companies. It's going to certainly raise the competitive threat, but these are big companies with a lot of money to invest in AI. If they do it right, they should be stronger organizations than ever and more profitable than ever. So this is where I kind of think like right now, there's still too much, the dust has not completely settled. But I don't know, 6 to 9 months, I think people have a lot more clarity on what AI is and isn't and how it's going to be useful to a lot of these existing software companies, large and small, not destructive.
The companies that are coming to you, looking to raise a Series A, are you seeing that they need less money? Are they asking for less money than maybe 3 years ago, 5 years ago because of AI is making them more efficient?
Definitely. Yeah, definitely. And it's interesting, Clint, like a lot of investors that I've talked to that are upstream from us, right? Larger funds, they're wondering, hey, do we start coming in earlier? And which would mean, potentially more competition for, folks like Blueprint. I don't see them doing it anytime soon because their funds are just way too big for it to make sense. But I think what they're thinking through is, am I going to, if I don't invest in like a Series A or, an early round like that, are they ever going to need a B or a C or a D? Or do companies now, because you can be so much more efficient, do companies just get that Series A, use it for that kind of initial launch growth, and then, get to profitability and self-sustainability and never need those additional rounds of capital. Um, I don't, I don't think it's going to go that extreme anytime soon at all. But I absolutely agree that businesses, you can do more cheaper, quicker, and so of course you should have to raise less money.
You're in an interesting part of the market too, where they've established it. They've shown traction. They have customers. They have ARR, as you were saying. Um, but still, everybody talked about the SaaS apocalypse. There might be a bit of a VC apocalypse. Given AI might make it a little bit easier to do things with less money, right? Not
Yeah,
might, it definitely is in a lot of businesses. So give me your sense for like the state of the venture community,
yeah.
state of venture generally.
Well, so we think like, if you go on our website, we say it kind of tongue in cheek that we're anti VC, because I don't really believe in that model. It's a different model than growth equity. I know there are like slight nuances to people who aren't familiar, but venture capital is more so like, here I'm gonna, you know, I'm oversimplifying, but I'm gonna make 30 bets, throw 30 darts, 27 of them are gonna be zeros or next to zeros, but I'll have like two or three really big winners that end up being unicorns that compensate for all those losses. So their loss ratio is like an 80%, but those 20% are hopefully very big. Our strategy is very different, where we do focus a lot on the fundamentals of the business, the financials of the business, the track record. And even though they're young, I'd say like in their adolescence, they're not brand new businesses. We're not just betting on, hey, I like this market, I like this entrepreneur. We're betting on, this is a solid business. And of course, do we like the market and the entrepreneur? But we lead with, is this a solid business? And so our loss ratios are should be a lot more like upstream private equity, which is the inverse of that. It's 80% win, 20% loss. So uh, sorry for the tangent, but I want to make
No,
sure
no, that's super
we don't
useful.
get
Yeah, that's super
too
useful.
see. Uh, so yeah, I think so. I can say right now, we've been fortunate to have some really great investors and some and very positive results, which have made getting those investors relatively easy compared to other funds. I would say other funds that out raising right now would say that it's a lot tougher to raise capital, especially for those new funds, right? Which we were 8 years ago, and we could talk about that. But it's never easy to raise a first time fund. I think right now it's next to impossible. Um, at least within the kind of like software ecosystem, because things are changing so quickly. A lot of investors are, fleeing for safety, which is the staples that people who have been there for multiple funds. And so what will that do? Yeah, I think you'll absolutely see the number of firms decrease. Um, but it's not going to happen overnight. Like these funds raise, you raise a fund and you're around for at least it's usually a 10-year fund, and
Yeah.
so even if it's really difficult to raise an X fund, um, for some folks that don't have the results, then it's going to be a while till you see that drop off. I think you'll see it first is, like I said, those like first time funds, um, at least for now, are not getting done. But again, I don't know how much of this is just a temporary kind of flight to safety versus a long term, uh, new world. I also think like there's going to be a new wave of new firms, or of at least of investment in, like I said, like this it's a scary time, but it's also an exciting time. Like there is the opportunity to make more money than ever as a software investor if you do things right, because software is truly like taking over the world and every aspect of it. And no matter where you sit on this, from a political standpoint, it is taking jobs. And the vertical software market is, 5% of what the potential of what it could potentially be in 5 to 10 years because of all the things that it will be able to do and take over. And again, I'm not saying that's right or wrong, but if I think the last thing you should do as a software or as an investor in general is to say, oh, I'm not going to invest in software right now because AI is software, So it's like you will be missing out on what the, biggest investment opportunity since, in my opinion, the internet. And so yeah, I know that was a couple of different tangents, but it's a it's just a wild time, and it's gonna some firms will hurt from it, at least in the short term, but I think in the long term, uh, investors are going to be pretty happy that they kept their the right software GPs.
And it's such a fast shift that happened because I remember like 2021, 2022, like everybody was starting a fund,
Yeah,
you know,
yeah,
and it was pretty easy to start
yeah,
a fund. And now, like you said, it's next to impossible to
yeah.
start a fund. And so it will be interesting to see how that changes. What verticals are you super excited about?
Yeah, we really like vertical operating systems or systems of record. So Um, we've made 26 investments now across the three funds. Uh, almost all of them have been there. We've had a couple horizontal software platforms, but for the most part, they're these vertical mission critical software platforms to these that sell to kind of unique industries. So we very much like that. We liked it before. I think we like it even more in this new world, because you want to be in the workflow. There's two things, and I'm not the only one that'll tell you this, but you want to be in the workflow. So, um, the closer you are to the like operating system mission criticality, being like in the middle of their day-to-day operations, the better. And then you also want to get access to proprietary data that, the broader, Anthropics and Claudes don't have. And if you have those two things, it starts to build a pretty solid flywheel, for, as far as your moat or your differentiation. So that's where we want to continue to play, and we've liked to invest. So you think of like we just invested in a business named Develo, which is a operating system for pediatricians. So it's like an AI native operating system. It is their everyday, where they put in all their notes, where they order prescriptions, where they, interact with insurance carriers, to get paid. Um, you know, that type of a play we feel very good about going forward. Pediatricians, they're not going to go vibe code a software solution, that's HIPAA compliant and, and doing all these things. Um, and if we can keep introducing AI into that system to help them do their job better, then, um, you know, we love that. So we have plays like that. We have a vertical operating system for golf courses, one for, um, pickleball and padel. We have a couple in construction tech. We've always liked construction tech and prop tech. Those are two big industries for us because they are so, outdated from a technology standpoint, and they're very large markets. So a lot of opportunities there. So things like that are what we will continue to invest in.
Is that how you say that? Padel? I always thought it was paddle.
Yeah, I think
I've
that's
been
how
saying
the
it wrong.
Europeans say it.
I've been
So I don't.
saying it
Maybe it's
wrong.
just me getting
I
fancy.
haven't played it yet. I hear it's amazing, though.
It's really cool. It's really
Yeah,
cool.
I hear it's even funner than pickleball, which I love.
Yeah, it's a lot
Um,
funner because you don't spend half the time chasing the ball, you know? So
real quick, when a founder comes to you, obviously, they got to be the right vertical, kind of meet your investment thesis. But what are you looking for in a founder themselves?
yeah, a couple things. One, so historically, we've been drawn to founders that are solving a problem that they lived. So they kind of came from industry. They were like, I recognize this problem. I'm going to go solve this problem. I don't know if I'm that as reliant on that as before. I still think it can be a plus, and it can really help you go from that like 1 to 5 million. If you're from industry, you have the contacts like that is really helpful for that stage of growth. I think for, later stages of growth, it matters maybe a little bit less. Um, but what I'm really looking for is, uh, like intellect, like we're as much betting on the jockey as the horse, right? So we're minority, investors for the most part. So we're betting on you, the entrepreneur. And, so, I am really looking for someone who has like the capacity to grow as an entrepreneur, and take that business not just from 1 to 5, but from 5 to 20 or 25. Or, it's not a bad thing. And we've certainly had this happen where entrepreneurs come to us and they're like, "Hey, I'm the 1 to 5 guy. And I know I kind of tap out around this level because I'm not good at X, Y, and Z. And I want to focus on these other things. Doesn't mean I'm going to leave the business, but help me, find someone great who can come in and take it from 5 to 20. That's a fine answer too. So looking for someone who either way is, um, is intelligent, um, obviously hardworking, focused, is a big thing. An entrepreneur who comes and is like, I'm doing, you know, this one thing really well, but I'm also doing these 15 other things and I want to go down, do this and X, Y, and Z and start this new product and go into this new industry. That's not as interesting. It's like, if you are doing something right, let's stick with that. And let's really focus on how we can be the best at that. Um, and then, someone who has the capacity, I mean, it's okay again in that like 1 to 5 growth curve. Maybe you don't need it as much, but if you're going to grow from 5 to 25, you really got to be good uh, at hiring and retaining talent. and that almost becomes like your most important job. Um, Other than, the CEO's job, like, is number one, make sure you don't run out of money. But number two, like, make sure you're building a team around you that can scale and continue to scale this business. And so that's another thing, like finding someone um, who can, retain that the talent they already have, and then is good enough to go out and land the talent they don't for that next phase of growth.
Uh, From I mean, at this point, they probably have some sort of a board. You probably take board seats, I'm assuming, when you so give everyone a sense who's listening, who's an entrepreneur or founder, kind of at that stage, like what makes a good board meeting and board updates and communicating with your board and with your investors?
Yeah. Yeah, so most companies we invest in, I would say more than half actually don't have a board when we come in,
Oh,
because we are
interesting.
leading that first institutional round. So, you know, that maybe they'll have like kind of very informal catch up calls with, with some of their like angel or seed investors, but a lot of times it's not a formal board, and we're the majority of the time we're helping them like put together the first board deck, um, and kind of guide them through that. So it's not that's not unusual, but I would say what makes the number one thing, I would say the number one thing that derails board meetings that I've seen in my career, even before Blueprint, is surprises. And so, for investors, the hopefully you find someone that has, is not a hothead and is an understanding, individual, someone you'd want to work with, right? And assuming you have that person on your board, then they're going to recognize that not every day is a great day, and that things are going to go wrong, and fires happen, and bad news happens. You hope more good news than bad news, but bad news is part of it. And the only time I've really seen board meetings get sidetracked is when the board gets hit with some bad surprise, and the first time they're hearing about it is in the board meeting. So I was actually just talking to an entrepreneur the other day because this came up, and the board meeting kind of got off track, and I called him afterwards, and he's new in the role, and I said, um, "Hey, like, just if no, I actually think it's good cadence for entrepreneurs before, like a week before every board meeting, if you haven't talked to uh, the board members, like just give them a 30-minute call, kind of pre-brief them on what's going to go on in the board meeting. So it's not the first time they're hearing it. And they can digest a little bit and think about it and come with creative solutions and advice instead of like, oh my God, how did we not know about this? What do we do? I'm freaking out. Um, so yeah, communication, I think just like any good relationship, as my wife tells me, is pretty core to making sure things stay stable, whether it's at home or in the board meeting.
What is your sense for AI right now, and in particular, like the public sentiment around AI and building data centers and AI being so wildly unpopular
Yeah,
with the general public? I mean, you're seeing like all of these commencement speeches, these speakers getting booed whenever they mention it, things like that. Like, why do you think that is? How do you think leaders should be approaching that in the tech industry to change that?
yeah, that's a really good question. Um, you know, it's 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 interesting because all of I think a lot of it is coming from. Well, first of all, no matter where it's coming from, I get it.
Mhm.
It's AI is going to continue to disrupt jobs. And when you look at where it's disrupting jobs, at least right now, is those kind of entry level roles. So when you talk about commencement speeches, I can tell you if I was in college at a commencement speech and I was having trouble finding a job because AI is replacing all those like early stage entry level jobs, I probably wouldn't like it either, and I'd probably be bullying too.
Yeah.
That being said, I'm sure all of uh, uh, those young adults are using it in their daily life, So, um, but you know, it's replacing there, and then it's replacing those like repetitive tasks, right? So again, maybe those aren't like completely entry level, but um, you know, but it is taking over. That's a lot of jobs in America, and so I you know, it's the reason I'm not in politics. I don't know how to answer that type of question. I think you know, it's kind of one of those things at this point, like the the genie's out, and so and you're probably not going to put it back in the bottle. I mean, you're not. You can hope for some more regulation, which I think you know we should have to make sure that nothing too crazy or negative happens. Um, but it's out there and you're not putting it back. So to me, it's like you got to find a way to work with it or work around it because it's as unpopular as it may be, it's a part of life now. And
Oh, yeah.
so, yeah, but I don't know what you do to solve the, you know, distaste that all those people that are, it is disrupting their life. You know, I get it. Like I would be upset too. And, you know, there's you could see a path where we're all disrupted in some way negatively. So in some way we should all be a little bit scared.
What does a typical day look like for you?
Pretty atypical. It's always different. But uh I would say, I mean, you know, I try to I'll start from the afternoon night. I'm a big fan of time blocking. Um, and there's a great book called The One Thing, like, you know, try to find the one thing that really matters to your week, to your month, to your year, and make sure that all your goals and objectives are related to that one thing. So, um, my days are usually so hectic. I actually sleep a lot better if I time block the next day. And so you know, I know I have a bunch of scheduled meetings, but then I can block out like here are the things that I know or I need to do for my weekly goal, for my monthly goal, for my yearly goal. So that's kind of at the night, and then the day. Yeah, it's busy. I mean, we're still a kind of a startup, I guess you could say, of our own. Like we have our own company to run, Blueprint, which is a 21 person organization. Meanwhile, like like companies also have investors, but we have a ton of them, right? Because we have $600 billion. So you still have to, you know, respect that those folks want time and attention and reporting, and so that's a whole nother job. And then of course, you know, our primary job is to find great companies and help those companies grow. And so a lot of the time is focused on, you know, having calls and trying to, you know, find the next investment. But the majority of my time is for sure spent on companies we've already invested in, working with those entrepreneurs. We have a ops team of 6 people now that are focused on nothing but helping those companies with hiring or with go to market or with AI initiatives, all free of charge. We do well when they do well, and they sell their business. But a lot of our time is just like, how do we've seen this movie so many times before at this stage of growth. Like, how can we help the entrepreneur and be resources to them, not just from advice, but probably even more so, like how do we roll up our sleeves and actually do work on their behalf?
Finally, we end every interview with the same question, and that is at CEO.com, we believe the chances one gives is just as important as the chances one takes. When you hear that, who gave you a chance to get you to where you are today?
I mean, the obvious answer is my parents. You know, just working their butts off, and you know, I came from you know, my mom was a school nurse, and my dad was a part-time ski instructor, and he was had other gigs too, um, but yeah, had to work really, you know, they had to work really hard to make sure that I had every opportunity that I could. So that's the biggest one. But the other one, I mean, I would say that I started my investing career at a firm called Mainsail Partners, and the 2 partners there, Gavin Turner and Jason Payne, you know, they definitely took a chance on me, and brought me on, even early from my investment banking job. Um, and, uh, and so, yeah, I give them a lot of credit. Um, and yeah, and then Dave Dutch is a mentor of mine too. He ran one of the companies that I worked with, and we've been super close. He actually just was the officiant that ended up marrying me and my wife about a year ago. So he's been a mentor and I guess now even bigger part of my
Mhm.
life. So those three people outside of my parents, they gave me every opportunity that I couldn't expect, and and so yeah, those are the three.
Sheldon, thank you so much.
Yeah, thanks for taking the time.